lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines and, most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak to transportation professionals on this show, as well as my twice a week long form podcast, because I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Friday, all. TGIF, Corey Buchan, Flo, good morning and happy Friday. Travis Vaught, good morning to you. And yeah, you guys, we're going to jump right in. So we're starting a new thing here. One Friday a month, we are going to do what's called Financial Fridays. I think, with tax season just wrapping up here the other day, it's very fitting that we get in and start with this, because there's a lot of things on the business financial side of things, getting financial health in your business, business credit, personal guarantees, all of this stuff, and what it means and how you need to be focused on this thing as you go out there and you try and secure financing or factoring or anything like that. So I got my friends over at Denim to join me on this Financial Friday journey. And with that being said, my man Sean is back on to break this all down. Sean, thank you so much for joining me. And it looks like you turned around and headed back to Massachusetts there.
I did. I took a spin to walk back. Man, I'm gonna drink out of my favorite mug every Finance Friday. Community adjusted EBITDA. This is a play on the WeWork guys that bankrupted that business, and it's gonna be my favorite mug every Friday.
Oh man, oh dude. So what is a personal guarantee? Let's jump in there for people who maybe are looking to get financing in business and they've never talked to a bank or anything left. So like, what is that?
Yeah, personal guarantee is something you're going to probably see in your contract if you have some sort of non-physical asset or something that you want to lend against, like an unsecured credit line or something like that. So the reason why people do personal guarantees is that it's an additional risk control for a lender in case something goes sideways and you turn out to be a bad actor or something like that. So it's a promise by the borrower, which in this case with us would be, freight brokers and fleets. They would promise to repay money that was lost and unrecoverable due to some sort of challenge or hardship or something like that. So for 99.99% of cases, they are a clause on a contract that collects dust and nothing ever comes of it. But in that very small percentage of time where there's some sort of, bad boy clause or bad actor or something to that effect, the factoring company can force you to repay basically money that is outstanding due to some sort of situation that might have occurred.
Yeah. And that is something, learning everything on, I don't want to call it on the fly, but I think one thing that kind of came as a surprise to me early on is the difference that your business needs to build credit aside from the entity, right? So like when I started my business, I started an LLC just like everybody does. And I thought that, this is going to be easy. And now everything's going to be in my business's name. Everything's great. That's what my CPA told me to do. Open up the business bank account, the business savings account, all of that. But then I went to apply for my first business credit card and they were like, yeah, we can approve you for this, but you got to have a personal guarantee on the line of credit that we're about to extend to you. And then from there I did that. I got that rolling. And then when we opened up got our freight brokerage up and running and we went and, we got our first line of credit from the bank, same thing, personal guarantee associated with that. We are liable in the event that we can't do anything like if we can't pay that back. And then same thing like this last year, I'm fresh on all this because I bought a truck in my business's name because my CPA is like, hey, it's an 80% depreciable asset in 2023, but in 2024, it drops to 60%. So I went and did that. And same thing, I had to put another personal guarantee on that loan that I was going to pay it back. And a lot of it is it's in the infancy of your business. It is very challenging to get these things off the road or off the ground. So people are weary to lend you money right away. Even and this is the thing, man. I had 4 years of an established P&L. I had everything. I sent over all my financial documents, and the lender sat. He's like, "Hey, you look great. Like, we're lending you this money, but like this is a standard procedure out there that everybody has to go through." Now, the thing is it's for kind of like, at least the way it was explained to me, this is for the first time. Once you pay this loan off in your business's name, or you utilize that line of credit in your business's name, we will eventually remove the personal guarantee for it because the business is showing financial health at that point.
Think about it. I'm sure many of the listeners out there, I know myself included, have student loans. Too much of them, they hurt. I totally get it. But when you signed up for your student loans, you had your parent, you had a family friend, you had somebody co-sign with you on that student loan. This is you co-signing on your business, right? It's the same exact idea, and they're super popular. 60+% of SMBs out there are signing personal guarantees or some form of, and I think that's frankly low, right? Like if you're going out to get money, they're very standard, as you said.
Yeah. No, and I get that, right? And I think like there's, again, people only know what they know, right? And when you sit down with somebody for the first time and they're like, "Hey, yeah, we'll give you this line of credit, but you need to personally back this up. Otherwise, we're not going to do it." It comes as a shock, right? Like to me, man, I was almost offended the first time that I got it. I'm like, dude, I've been doing this for a few years now. Like,
Yeah.
I have a proven track record here. And then, in not as direct terms are like, it's been 36 months, man. Like this is standard. You have to go through this.
Yeah.
But again, this is a short-term thing. And this is almost like kind of graduating in business where, it's a completely separate ballgame than your personal life. Right. And here's another thing too, that I had learned out there when I bought this vehicle. Guess what? I can no longer have a personal automotive policy. It's now a commercial automotive policy. And there's these different things that I'm learning kind of along the way. And I'm putting all of this stuff out there for people to either better prepare them for them. And that's what this whole conversation is about is it's like, why is this a common theme that's out there? And you should expect this to happen. This isn't a personal attack or anything. This is kind of just a process that every financial lender seemingly follows.
Yeah. This, I'm sure many of your listeners know this. The factoring contract is not for the faint of heart. It's long. It's pretty complicated. There are a lot of clauses in it. This is one of those clauses. And so as you read through it, like everybody should, whenever they sign a contract for anybody, you read through the whole thing top to bottom and you ask questions where you need to. And people get a little uncomfortable when they see something like this. And for those that I saw Brandon pop into the chat, for those that bet on themselves, this is a non-issue for you, right? Because you're pushing all your chips in. You have no intention of ducking and running. And as long as that's the case for you and for your business, this is going to be a great tool for you to reduce your cost of funding and increase your advance levels. Because for a factoring company or for any sort of bank or lender, they're going to look at how much money am I going to outlay for you and how much is it going to cost for you to be able to outlay that money. And if you're willing to sign your bet on yourself, right? Sign on this guarantee that says, I am good for it. You have more of a chance, or at least you have more trust from the bank to be able to max out your advance amount and reduce your cost of funds as much as possible.
So how can people be better prepared for these conversations initially, right? Like what are some of the factors that you guys look at when you're deciding, anything like it, like levels of credit that you're willing to advance out there to individuals? How do you is there any parameters that you guys follow about that?
We're our big thing we talk about all the time, flexibility, right? It's like kind of the name of the game when you want to work with us. And we have a ton of tools and tech and capabilities to like be more flexible. And so for us, if people are uncomfortable with personal guarantee, we provide choice. Say, okay, if you don't want to do a personal guarantee, you feel really uncomfortable about it, then let's partner up and find somebody to issue like a credit insurance policy that says that if something is, if something crazy happens, a black swan event, whatever the situation may be, we have a backstop instead of a personal guarantee to do that. Now, those are a little bit more expensive, but you kind of pay for the flexibility to be able to do something like that, right? Or maybe we go ahead and we'll start you on a lower advance amount to start, and then we kind of build it up as we get to know you more. Because like, think about it this way too, Chris, right? It's like, if you're opening a bakery, you're going to buy an oven and you want to get a loan to go purchase that oven, the bank can come and take that oven back, right?
Yeah.
Like, that's not always the case in this digital world of market makers like freight brokers, right? There's just not the assets out there are not the same.
Yeah. And, again, these topics are what people need to think about prior to starting a business, right? Like I would, again, like analysis paralysis is a real thing. And I'm more about like just running and figuring it out kind of as I go. But like, there's a lot of steps out there that you need to be prepared, or at least aware of before you go down this route, right? Because it's like, and then another thing too, are you guys looking at how a business's financials are organized, right? Do they have an actual P&L statement? Do they have a bookkeeper or a CPA that they're working with? When they have that and they deliver that to you guys, are you like, from a risk assessment standpoint, are you guys like, well, hey, these guys are probably a lower risk because they've already kind of built out a security layer in there?
So the beauty of factoring with someone like us for your brokerage is that it is not as important to us about your like financial health and your financial stability. And it's more about your, let's call it your lien history. If you have like fraud history, if you have bankruptcy past, stuff like that, and the risk of your shippers or your creditors that we would end up purchasing the invoices from. So if you're hauling freight from Home Depot and Lowe's and like blue chip businesses, and you don't have a history of fraud, then you're going to be a pretty good candidate for us, right? And like, we're happy to take you on. Now, when you get to more financial underwriting, which is something like a line of credit like you would have, right? And you don't have a pro forma that you can share, and you don't have bookkeepers that you can work with, you're not going to have a great time, right? Same way if you go and raise money as a venture-backed startup, if we can't provide our financials and our financial plan and what our income statement looks like, stuff like that, nobody's going to want to give us any money either, right? So like, there's a standard that you need to be able to meet depending on which type of credit you are trying to acquire and what sort of terms you're looking for.
Can you explain what a pro forma is to the audience? Because I know the first time I heard that, I was like, a pro what?
Yeah.
Yeah.
And so I guess firstly, it's like you should find a financial professional that can help build one of these for you. But as you think about like the picture that you want to give somebody for your business, you want to have a good view of your income statement. You want to have a good understanding of your balance sheet. You want to be able to provide some sort of cash flow statement, right? Those are like the three most common assets that some CPA would want to be able to produce for you about how your business has been performing. Now, if you're a new brokerage, you don't have anything, and that's okay because you're not going to go try and get a line of credit from Wells Fargo on something without any sort of history or any sort of book or anything like that. So I wouldn't worry about that if you're new. But let's say you're going for 36 months, you should have a pretty neat and tidy set of financial statements that you'd be able to provide.
No, and I would highly, again, and I've said this before, and I will literally scream this from the mountaintops. The best move that I personally made in business was hiring a CPA and getting a good CPA right away and a good bookkeeper right away, as well as an attorney, right? Like, obviously, I think that goes without saying. And, from my perspective, if you don't think that you need one or you don't think you can afford one, I don't know if you should necessarily attack going into business, because you need an understanding. Like, you brought up contracts, for example, Sean. This is one of those situations where it's like you need a quality attorney to actually explain to you what all of this stuff really means, because sometimes the emotions come into it, right? You're like, hey, I need money, I need capital to operate with. You kind of turned a blind eye at times to the real verbiage behind what these contracts actually mean. And then you think 6 months down the road when it comes up, you're like, wait, nobody told me this. You guys are screwing me over at this point. And that's just not the case. It was in there the whole time.
Yeah, that's totally right. And all of those. So you are hiring professionals to help you make better decisions. They're not making those decisions for you. they're helping you get an understanding so you can make a good business choice for yourself because you're accountable for your business, right? And so a lawyer is going to help you interpret stuff within a contract. A CPA is going to help you paint a financial picture. And so you can take the terms and you can take the state of your business and you can try and make good choices so that you can find the right capital at the right cost for you.
Yeah. And that's another thing too, right? Like, have you ever, like, can you buy down an interest rate? Because I know, like, in my mortgage, for example, when we got my mortgage, they were like, hey, your interest rate is this. Or if you give us another $5,000, we can get
Right.
you this on an interest rate.
Yeah, like taking out points and stuff. I think
Yeah.
that's like a really interesting strategy, especially in this like tight market, right? Where there just like isn't a ton to go around. So our version of that basically is like allowing you to be able to delay payments or to be able to tie your rate more directly to the capital that you use. So if you're pushing payments out 15 days, you're going to get 15 days worth of a rate reduced, right? And if your shipper pays 5 days early, great. Your money was in the market 5 days fewer, and so we'll give you discounts on that, right? And so this sort of flex factoring product that we talk about is as close as any freight broker can get to a line of credit while still being able to run your payments for you, still being able to run your collections for you, and you go into business for yourself and you bet on it for yourself.
Yeah, and I just think like these are the conversations that are so warranted out there when you're choosing a financial partner in the market, right? Talk to them about this. Talk to them about, hey, what do I need to do in my business to get a lower rate? How can you, like, I understand that there's an introductory fees and everything else that kind of come along with all of this stuff. Because again, you guys, I want to be abundantly clear. Money's not free. Okay. So if you think somebody's just going to willingly hand you millions of dollars when you haven't proven anything, as they say on South Park, you're gonna have a bad time.
You have a bad
Um,
time.
yeah, I just think like you need to have people who are gonna break this down for you to understand, like, hey, this is where you are today. But if you follow these steps, you can lower your rates, you can lower your interest rates, or this is what you can do to improve and grow your line of credit, right? Because that's one thing that we're looking at, in the brokerage here is hey, we got a line of credit approved, but like what do we need to do to get an increase to that, right? Like what steps can we follow? Like my business partner and I are very diligent about doing those things and kind of following those steps and meeting with our bank on that. And our bank is great about really breaking this down and doing that. And I think like those are the signs of a quality financial partner who are like, hey, we see a lot of value in working with you as the business. But hey, but we want to meet with you and kind of coach you through, because at the end of the day, there's not a playbook out there of, hey, follow these 10 steps. And, or at least there's not a real playbook out there. I'm sure you could find some internet guru who's got one for sale somewhere, but it's
$179.99 too. He'll sell it to you.
Exactly. He'll sell it to you right away. But I think like from my perspective here is working with those partners to get a better understanding. Same thing, working with your CPA. How can you improve the financial health of your organization out there? It's so crucial to me. And I think like and I think that that's kind of where we are in the market right now, Sean, is there's a lot of people who got in. They were cashing checks left and right? Like, because it was easy. And then they had excess cash in their bank account. And then now we're getting to that point where it's the survival of the fittest. It's the people who are making smart financial decisions in their business to protect themselves in the long term.
And things change all the time too. So like the line of credit that you got 3 years ago, 18 months ago, there's probably a different version of another line of credit with another set of tools with a different variety. So like staying in the market is also really important. Like just because you had a relationship banker at your credit union that you really liked and they're great friends of yours doesn't mean that you might not be leaving something that might be a little more exotic on the table that might be a better fit for you. So just like keep your head up, right? It's like even if you feel good, just like keep your head up out there,
Yeah, you need to be assessing that stuff all the time, right? Because it's like, is it the right fit for you, for your business, for the stage of your business too? Because like that was one thing, like we started in a large national, one of the largest banks in the United States. That's who we started with. But then we, after some more research, it was more of the, hey, let's go to the regional bank. And, because it's like, there's those different things where I think like there's different stages in your business where you work with certain financial institutions. And then as you grow, you need to assess that. And again, like and this was something that I talk about with the insurance reps that I have on my show to break down insurance. Like, when's the last time you talked to your insurance agent about, hey, is this the best coverage for my business, or do you just let this shit auto renew and then you haven't had a conversation with these guys in a couple of years?
Yeah, that's 100% true. And at different stages of your business, you have different needs too, right? So
Yeah.
like kind of getting back to the personal guarantees, like, is that really important to you? Is it really important to you that you need to shed this personal guarantee clause and find a financial structure that works for you? If so, get out into the market, grit your teeth, sign it so that you don't put yourself in a hole in terms of the capital that's available to you. And then 18 months, reevaluate, see if there's a better fit, try and find somebody that's going to give you a structure because that's what you want. And so you should go ahead and get what you want.
So when it comes down to the personal guarantees again here, I just thought of this is it's like, are you guys looking at, hey, these guys have only been in business for a year or 2 years, or are you looking at their financial records and you're like, you guys blow cash, like blow it. Are you guys looking at their P&L at that point too and making
Totally
those
no.
decisions?
No,
No.
we
Okay.
won't do it. We won't look at your P&L. If you want to buy G-Wagons, once a month and get a new lease for a new G-Wagon, we're rooting for you. But we're still going to get your receivables, and we're going to still make sure that those liens are extinguished across your business before your check kind of comes, right? So we're keeping your hand from kind of dipping it into the cookie jar with our structure so that you don't get bit. Now, when it comes to, removing a personal guarantee, after you have some history with us, if you've got a credit insurance policy that you want to give because you don't really feel comfortable, then that's perfectly fine. And we're totally down to have that conversation with you. If you're an established broker that's bringing a full book of business, I think we're much more apt to have a conversation that way too, right? So just like same sort of thing. It's like, have you proven yourself? Do you have a book of business? Is money coming through the door? Is the cash flow healthy? Then there's a lot more room to be able to be flexible.
Okay. So what's like a general time frame that you've seen where if somebody came in there, they had to get a personal guarantee right away, but they did a couple of things and they got the personal guarantee removed in, is it 12 months? Is it 18 months, 24 months? What does that look like?
Yeah. So the personal guarantee, the biggest thing is to be able to provide like a risk control for the lender. The other thing that provides a risk control to the lender is a contract. So like committing to a specific term. So if you're going in with a factoring company like us, you sign a personal guarantee, you sign a 12-month contract. At the end of that 12 months, before it auto renews, you better be having a conversation, right, with your account manager or with your customer success rep or something like that to just get a sense for, how am I trending? What's the risk on my book look like? I've got no chargebacks. I have no losses. I've got no write-offs. I've got no this. I've got no that. All of a sudden, you become a model citizen, right? And then we can be a lot more flexible with you. Because when that renews, that's a great time to repaper an agreement.
How important you brought up receivables insurance earlier as well. How important is that? Do you think for businesses to like probably never get rid of that? Is that because like to me personally, I know that having access to that I think it's pretty important out there, right? Because in the event that something happens, I want to be protected, right? Like I don't want to have to close my business down because of the mismanagement of another business. And as a broker, you see this stuff, right? Like this isn't talked about at all, that when shippers go out of business or shippers stop paying invoices and everything. So it's like, what is your stance on receivables insurance? That's kind of like a constant out there for a broker.
Yeah, receivables insurance. Another term is called like trade credit insurance if you're going to look for it. And our take on it is that if you want to carry an umbrella, you totally should, right? It's totally up to you. It could rain at any time. So just like it's up to you on the choice that you want to make. They do cost money, right? And so
wait, they're not free? They're not free.
Correct.
Oh, okay.
Hot take, not free. And I mean, it's they're like
that's funny.
Tell that to your broker. There's a lot of backstops that you can find for yourself. Like there's a lot of coverage that you can get. Some of it's insurance. Some of it is like you work really closely with your factoring partner on credit reports that they pull for your shippers. And so maybe you're triple checking those before you go. And maybe you're more selective about the shippers that you work with and you spend a little bit more time on that because you don't have trade credit insurance. Or maybe you do have trade credit insurance and you let your factoring company know and you say, hey, I've got this insurance. Here's my policy number. You guys are a beneficiary in the event that this goes down. So let's open it up, right? And so you can play that risk reward game for yourself because it could be a strategic advantage for you, right? Like you can be able to move loads for Party City because you feel good that like if they go bankrupt again, then you'll feel like you'll be in a good spot, right?
Yeah, man. Again, like these are the situations and the scenarios that I think a lot of individuals do not think of when, and again, I didn't think of this shit when I first started doing everything, and then unfortunately, when you learn the hard way and you get burnt for a couple $1,000s and you're a new business and you're like, damn, how like that's going to really screw me over a lot. How am I going to pay my bills? These are these conversations that, get in establishing relationships with potential companies early on, I think is really crucial in there. Just to, again, get a better understanding. You got to create, protect your biggest investment, right? Like again, as a bootstrap, as a guy who's out on the road this week, again, you guys, I am the expense account, right? Like there isn't a imaginary expense account. That's me. That's coming out of my, investment to go out there and see people. I need to look at it as, what's the ROI? Is it worth it? And does it protect my business? Because I know the amount of time that I put into things. I know everybody works hard, and I'm not trying to say that nobody does, but like at the end of the day, if I get screwed over, I want to make sure I'm protected so I can make my payroll and make sure my vendors are paid, because again, they don't give a shit. They're expecting their invoices to get paid.
And so I had our CTO, Sean, gave me this advice yesterday. He said, when it comes to managing your risk, you should be thoughtful about the controls that you use. So you can take controls away if you want to grow, but don't take it away to reduce cost. So if you're trying to cut corners because you don't want to do the work, that's a bad idea to be able to not do something, right? But if you're being thoughtful about it because you want to take on some more business, because you really want to differentiate yourself, that's a bet that you can take on yourself and on the business. So do it.
Yeah, I think it's almost like run a risk assessment on your P&L. All right, see what are these things? Because if you're looking to cut costs, because every business is always doing that, it's some capacity, right? Like, look, what is it? What is it that you're spending your money on? And again, if you haven't actually done this, which again, if you own a business and you just got your taxes done, like you should have a nice document that your CPA or your tax professional sent over to you that you can break down and see what are those categories. I view that all the time, man. And I compare it between years of, hey, what did I spend on travel this year as opposed to last year? Why did I spend that on travel? And I want to see like, what can I do to reduce my costs at times to, again, sustain through times when revenues might be down or when revenues are up. Keep operating the way that I operated when revenues were down so I can build up those coffers of cash to sustain these down markets the next time it comes up, because it's going to happen again, you guys. It's cyclical.
The best companies are built in down markets because you create the discipline, right?
Yes.
So like for those folks that are looking to learn more, we got a blog on personal guarantees on Denim. And
where do they find that?
Yeah, go to denim.com, the golden domain name. So head over to denim.com. We've got a blog. We have a P&L template too, if you're looking for that. We have a personal guarantees blog that goes into some more detail. And Ultimate Guide to Factoring. We talked about factoring a lot. That's like one of our gem pieces. I think we're number one ranked on Freight Broker Factoring right now because of that piece. So check it out for sure.
I love it, man. And I will actually put that link in the show notes, you guys. So if anybody wants to listen to this audio on the replay, which I'm sure you will, because I know I'm going to have to, because I know Sean talks about so many different topics and I learn every time I talk to him, man. But yeah, I'll put it in the show notes, you guys, on iTunes and Spotify for you guys to check it out. Check out their blogs on this, you guys, because again, personal guarantees are not going away. You need to be more prepared about this for when you go in and sit down with your preferred lender or factoring company or whomever. So you're better prepared and you're better educated on this. But Sean, I can't wait to have you back on in a couple of weeks, you guys, because again, once a month, we're doing Financial Fridays, you guys. We're going to teach you the fundamentals of business, finance, credit, health in your business, and all of this stuff for better prepare you out there. How does anybody reach out to you individually though, Sean, to find out more?
Find me on Twitter, find me on LinkedIn. It's probably the best place to find me. And hit contact us. Everybody will come and hunt me down. No big deal. It's great to have be on the show, Chris. And more Freight Coach, dude. Finance Friday. I'm pumped.
I love it, man. Sean, thank you so much. And as always, you guys, if you guys got value in what you heard, subscribe to the show. Share it out there to your network. We'll be back in studio on Monday, 8:30 a.m. Pacific, 10:30 Central. I appreciate you guys. I love you guys. And we'll be talking to you soon. I know, it's just an awkward way.